Well, hello, folks. Top Gun here with you this morning, and I got a good one for you. Even got a little extra dose of hopium because I apologize. A few of you viewers probably haven't watched me in a while and just got some responses. Pretty much, I thought YouTube was giving me every comment as I got them and I was responding to them all. I didn't realize that it was selective, and I had to find a section in my dashboard that allowed me to hit all comments. I'm so sorry that you guys didn't get your responses right away, and I do have a special little dose of hopium for you today. Alright, I've talked to all of you. I'll listen to all your concerns. Plenty of volume in the mic! Alright, you'll be able to hear this. So, anyways, if you're done bleeding from the ears from that, we're going to have a look at a few things. We're going to start at an outline for this show because this might be a long one. Alright, so what are we going to cover today? We're going to cover some topics, some market news about Tesla, Twitter, commodity rally, ETH, and Hex. Really? There could be news about all those? There can be. And coming to Pulse. So there are a bunch of companies I have talked about before that you guys might have recognized. It would help if I was set up a little better for this, right? You might have recognized this if you've watched my earlier videos. So we're going to talk on the value coming to Pulse Chain, the pain in the market, the economy, all sorts of things like that. So I'm going to keep my itinerary open and start talking. So market news. Why do we even care about Tesla and Twitter and all that good jazz? Well, I mean, what happens in the stock market does affect us in crypto, although a lot of people like to pretend it doesn't. We're not insulated from the entire world. So with Tesla and Twitter, what we're going to talk about is the fact that Elon Musk, and this is important because this will touch on something else available to you. This is called margin trading, leveraging. You'll be able to do this on Pulse. Don't do it. Elon did it. He leveraged, took a loan against his Tesla, okay, to buy Twitter. $44 billion or 45 or whatever. And that's not going well because Tesla's price is falling. And if it falls low enough, it will be liquidated in order to pay off the loan that Elon got. So he'll lose his shares. They'll get liquidated and drop the price of Tesla even further. And the price of Twitter seems to be dropping, so not a great thing to ditch into either. Plus the other crap he's running into because he decided to challenge the order of things and got a little too loud, so all of his history is being dug up and thrown at him. Funny how that works when you turn on the political parties that helped you get into power. Not that I disagree with giving them a little bit of checks and balances, but I didn't take handouts from them in the form of a factory on pennies on the dollar so I could start a brand new company and owe them my life. Yeah, so basically he has a $1 billion parachute. Pull a lever and get out of the deal. But is that legal? I mean, in the old days, before the FCC was in a coma, his entire company and business practices would be under review the moment he tried to pull out of that deal. Funny, he just actually, was pissing off those those political parties. The FCC, which I was so glad was in a coma, might be waking up soon to do something other than climate change. Elon, you had to know better. So basically, either way, now, if he doesn't pull out of that deal, like I said, Tesla will take an even harder hit. But if he does pull out of that deal, and the FCC manages to dig enough out on him, Tesla's still going to get beaten through the ringer. It's been overvalued. I did valuations video to explain that, and it's coming down, and that's just going to hurt worse. Basically, he's kind of got himself into a catch-22. So tech stocks, Tesla and Apple are at the lead, which usually kind of gets that Nasdaq a-fluttering. Okay? So we talked about market correlation in the Nasdaq, but what we're going to look at, again, commodity rally. Why is this important? What do I continually call Hex and Bitcoin? Commodities. They're digital gold. Hex is a better digital gold. Well, we call Bitcoin digital silver in that case, because there's Hex, it's digital gold. But those are still commodities, which means, is there revenue? Is there valuations? Is there anything I can do to predict the price is going to go up other than people don't have their money elsewhere, so they need to store it in a good store of value, like gold? It's a great store of value. Trust me, I've got Hex. Don't take that wrong. It's just you guys want the price predictions and stuff. Yeah. I'm going to talk about the news first here. So, why could we be getting a commodity rally? The reasons are basically we have oversold to all hell in most of the market. It has overtaken the pain, and it's due for a bit of a correction, which could also be called a rally or a dead cat bounce. It's not going to go to all-time highs, folks, but there will be a relief in some pain and possibly some opportunities to make money. What was a really good indicator of this? The call options on Coinberry. Believe it or not, the expectations for Coinberry as a stock to go up, the options market in the traditional markets, kind of an indicator that crypto's due for a rally. Also, a lot of commodities are oversold in the markets. Basically, commodities, unlike valuations, they're needed, and so, yeah. Oh, sorry, futures. I get these terms mixed up a little bit. I'm still learning, but so tech stocks are not necessarily what I'm counting on to lead, but the indicators are lining up, and not everything is quite there for commodities. But this week, we're likely to see either one of two trends in the markets. Our rebound could start today and carry through the week until Friday, theoretically. And then on Friday, because no one wants to take any more risk, they could sell out of the market. But if the market's in a little bit more pain this week, it's likely that it'll go down until Friday and get a purchase up. Either an inverse or. And how do I usually read that? I've got my little indicators today. I'll show you when we get into that. So what's the news on Ethereum? What could be happening there? Well, Ethereum 2.0, dead. Yep, gone. Just a merger happening and a switch to proof of work instead of proof of stake. Wait, dead. Yeah, I'm serious. Dead. What's happening? Just a merger. They're not changing to be more energy efficient. They're not reducing gas prices. They're just merging Ethereum Classic and Ethereum so they have a few more users on the network, but they're not increasing block size to make it run faster. They're not increasing block size to drop down the price. They're not decreasing validators. They're not switching their proof of work. They're doing no changes except merging to try and beat Pulse. Good luck with that, Vitalik. And then the news in Hex. Well, really it's a commodity, but what's the news? The sentiment around Hex. And the sentiment is bad, which means probably a good time to buy. I know, that sounds so, I've been saying that forever, but have I set more limit orders? Maybe. Am I going to tell you where? I might. But before we get into that, now we're going to have a look and talk for a moment about what is coming to Pulse. I've talked about what Pulse is. Pulse is a network, like a barren land that you can build upon, a whole country, and you build a functioning economy in that. It's not just a bunch of meme coins and artsy NFT JPEG rocks. It's a fully functioning economy, kind of based around NFTs and meme coins, but it's still a fully functioning economy waiting for even more utility. What do I mean about this? Well, we have our native currency, which is Pulse. It's Pulse Chain, so Pulse. Like in the US, you have the US dollar, Canadian, the Canada dollar. In Pulse Chain, you have Pulse. Funny how that works. But, interestingly enough, like in Canada, we had Canadian Tire money. Believe it or not, that was basically, in the 90s, as good as cash. Really, you could take it to any store, and they'd accept it, because everybody always needed a tool or a shirt or something from Canadian Tire, so it was just as easy to spend. So it was accepted. How strange. Yeah, a monopoly money that a company printed was just taken. So, internet money. will be paired with everything, just like Pulse. Yes, it's coming from the Binance Smart Chain, but those creators, they might have borrowed some of my math to know exactly how they need to pair their assets with each and every other asset that's available on Pulse. So, yeah, there might actually be, surprisingly enough, liquidity in this available in everything, just like Pulse. That means there'll be two monies to choose from in this system. I think that's pretty cool. And Pulse will be deflationary, but no buyback. It just burns as you do transactions. Internet money will be deflationary, but there'll be buybacks. So its value will actually keep going up because of buy and burn once the wallet launches and starts making revenue. Really? Yeah. Wow, that's pretty cool. So possibly an even more valuable money. I had been harping on it for being just a meme coin, but the moment you pair it with liquidity with everything, you turn it into a currency. Done. Any asset you want to change, you can put into internet money just as easily as Pulse. Really? Yeah, that's to me pretty cool. Stock exchange, PulseX, a DEX, a decentralized exchange like the New York Stock Exchange, but better. I own a piece of that. The construction company, Power City, which is making the core. More power, baby. More power. More power, baby. So they're creating a kind of stablecoin system in their core where they'll have more reserve backing to the watt than they need to so they can mint a little bit more watt as the core builds. This core will actually allow them to, in the future, possibly jump from chain to chain to chain, linking them through value, through various core projects, so that you can trade almost on a watt network in between. Pretty cool, right? Also, they're adding dev tools to node testing and validation services and yada yada yada, which means the devs have a playground. They're encouraged. Like if you ever saw, what was it, Eureka, and they had the General Dynamics building. Where the devs love to play. If you're that kind of nerd, or if you watched Fringe and you know what massive dynamics is, I'm like, Power City is for the devs. Come build and create here. They also threw in Pixel Park, an NFT tool. Everyone's trying to hit the NFTs. But yeah, Power City is going to help build the way and make it easier for programmers to build even more utility into Pulse. The basic bank is the Imd Wallet. Can you imagine having a wallet that accurately displays your balances? A wallet built for Pulse. A wallet that comes with free crypto. Yeah, and it's not Richard Hart's. That means there'll be options. Yeah. So this one is under construction as well. Interesting. And then, basic loans, liquid loans, a very stable protocol. And the haunted strategy, if you're not aware of it, I'm going to do another video on it to explain it in better detail. But a cool thing about Power City, they have a front end, which allows you to kind of just say you want to run the haunted strategy, put your assets in, and walk away. It runs it for you, automated. Yeah, it kind of takes the work out of it, so you can just grow your bags and kind of like staking it and forgetting it. Just a little bit. They're working on that. It's a lot of promises coming. But some of this stuff is done, some of this stuff is in beta, and some of this stuff is still dreaming. But the fact that all of it is very, very definitely getting worked on is very exciting for me. And we've also had on Fiat to talk to us about advanced banking and lending, allowing for margin trading. So this means with liquid loans, you can take a loan, but you can't be a lender. You can't make money loaning to people. You just take a loan, grow your bags. Simple. But advanced banking, interest-based loans, taking loans, giving loans, also allows you to leverage your assets, which means you can short things. Yep, you can. Yep. That's pretty cool. And then we have auction houses and file clerks' offices. Why do I talk about that with NFTs, with Mintra, Pixel Park, and NFT on Pulse? Well, basically an auction house is, like with NFTs, you bid and you buy, you trade. So it's not based out of a liquidity pool. It's more like auctioning. Why do I call it a file clerk's office? Well, did you know that copyrights, deeds, contracts, these are all the realm of NFTs, non-functional tokens. It's supposed to be basically a deed, a point of proof of ownership of either intellectual rights or other like physical property. They're getting kind of more into there, and you can actually agree into contracts with real people over blockchain using an NFT. That's some cool stuff that's not rock JPEGs. Now, again, why is this stuff all so important? Well, I said internet money will be bought up and burnt, pushing the price up. That means stock buybacks. Yes, FCC, I know you're not in a coma, and I'm still going to say it. This is stock masquerading as crypto. PulseX will pay dividend in the form of third-party tokens available on the stock exchange, and it'll pay in buybacks and burns, so that it never gets sold on your head again, like other companies will do buybacks of their stock, but much better, because it'll never be sold on your head again. Yeah, dividends and buybacks. Power City. Well, dividends. You'll be able to stake your wallet and earn, but I don't believe there will be any buy-ups and burns. There'll be a small amount of inflation, but dividends, that's important. Imd, well, that literally stands for Internet Money Dividend. It's these dividends from the wallet that'll be used to buy up the internet money and burn it. These are two separate tokens that work to go together. Pretty cool. Liquid loans. Oh, can I stake my liquid loan token? Can I stake other stuff? Like basically, you can earn USDL and Pulse for providing for the stability pool. Oh, dividends. Free Pulse. Well, they're doing buybacks. I'm not sure if they're paying out dividend, but I think basically if you want to play in the casino, you can get a discount. Don't play in the casino. But they're doing buybacks, and they have and burn, and they're starting with a very limited supply, a fixed supply, so that won't be increased. And then the auction houses. So we talked about Mintra. That pays dividends in the form of Pulse. That does buybacks and burns, so it can never sell. And then, NFT on Pulse. It's going to pay dividends in the form of Pulse. Yeah, all of these things are stocks, masquerading as crypto. I might own them all. I might have been hinting to you guys you should get into them. And that's why I get very excited as we have a fully functioning economy which puts value back into it, where these other chains, these companies take all of their revenues and run away with them and spend them on mega yachts and girls and drugs. But here, the value gets returned to the investors in the ecosystem, so we can choose if we want to reinvest it, which means there's more likelihood of the value staying in the network, which means the network may increase in value even faster than other networks. Is this what I've been seeing forever? Yes. Do I always have the words or the math for it? No. I did take some brain damage, folks. People made a joke that I sound like a genius who's been shot in the head. It wasn't a bullet. But a funny thing, when you're riding a dirt bike meant for country riding, off-road riding, and you're doing it in city, and the guy who convinces you to ride it has such a small head that when he gives you his helmet, it fits like a yarmulke, and so you can't wear it. And then he tells you the bike's safe, but he just put it together and he didn't tighten the forks right. And then you're riding this off-road thing on an actual street, and he decides to jump in front of you because he thinks it'll be funny, and you zig when you should have zagged, and the forks twist, and you do a face plant at about 35 miles an hour without a helmet. Some things happen. Okay? So yeah, I sound a little off. I do my best. I used to be more like Stephen Hawking, but you know what? Half of Stephen Hawking's brain is still pretty good. So we're going to dive into this a little further after I had that little rant. It doesn't get to me at all when people make fun of the fact that I sound slow. All right. So anyway, no, it really doesn't. It really doesn't, because before all of that, I used to actually be very ashamed of my intelligence. Honestly, people would make fun of me, mathematically speaking, pretty much treat me like a know-it-all. So I don't mind that people underestimate me now, because I sound stupid on the surface, but all the pistons are pretty much firing still under the hood. All right. So we've talked about the things coming to Pulse. We'll talk about the opportunities and price predictions at the end of this video. So now's the point when I want to go into the market indicators and the market charts. talk about just basically do a chart deep dive. I should have reorganized this one, and then we're gonna get into the math, the opportunities. Yeah, that's coming down at the bottom. It's last. No, I'm not segmenting this up. The best I could do was tell you it's going to be long and give you a format. You can click through to get to the end if that's all you want. So let's take a look at the markets. Yes. The economy. Oh yeah, I had all these images while I was going to talk about economy. Make it more interesting than my little intro sheet. But hey, again, not always running on all pistons. So, what's this scary thing? Maximum pain and hex. But that's not where I wanted to start. Okay, so we are about a half an hour from the opening bell. And what is this? The dollar index. The dollar's feeling some pain. It's not doing so strong. The Fed has not been scaring people. This means that likely oil in the market might be looking at a rebound today to start the week. This might have some morning effects in the stock market. This, as you see, I've marked, we pretty much don't have a lot of resistance all the way down to 100 here. So the dollar has a lot more room to come down and correct before we possibly see a rally, because we had such uninterrupted growth here that these points, until we get down to this little hump correction range, we're not finding a bottom. So the dollar has lots of room to come down at this point, which is interesting. Now, what is oil doing? Because that matters. Oh my God. Oil saying, we are coming back. That means there's still demand in the economy. There's still some buying power left because people can still buy oil because they need to drive to work. So the prices of oil are going up. The dollar's coming down. This means there's demand in the market. What does that usually mean? Demand in the market means we could be looking at the beginning of a small dead cat rally in the SPX today. We already closed in the green, heading towards to test this resistance line. All we have to do today is break this line of resistance, and we will be going right back up to this level of 40.60 to retest. If we can get above it, we can hold it as support, but if we stay below it, it'll be resistance to bring us further down. These are the market movements as they're coming. Nasdaq, I don't have pointed out as much, but it's basically a more volatile form of the SPX. The SPX is the top 500 producing companies. The Nasdaq is a 100 index of the more riskier tech stocks, but they do share some of the same balances, so they will move in step together. And the Dow Jones is even more boring, as it's the industrial average. But that comes down to car manufacturing, like the real secure stuff that is still hurting because the economy is getting crushed. Why does this matter so much when I talk about commodities and all this stuff? Well, did you know that the world's wheat reserves are down to 10 weeks? Yeah, I know, you're looking for crypto, but I might have hinted that pasta might be a good thing to buy and put in your shelves. The world's entire reserve of wheat has 10 weeks left. That's 2.5 months if you're not doing the math. That's June, July, August. The world has no more reserve of wheat. There'll still be wheat being grown in Canada, but Ukraine grows the most of the world's. It's not getting out. That's pretty hurt. That's pretty scary. People like to think the markets won't affect crypto. If the world goes into a depression, not just a recession, into a depression, who's going to be left to buy crypto? Money has to come from somewhere. We like to pretend we don't need fiat, but all of our crypto is priced in fiat. It's all paired in fiat. Have you been paying attention to Hart's Law? As long as they're connected, they're bollocksed. Now, funny enough, when you can go and use Pulse to buy some toothpaste and it's no longer paired with the fiat dollar that's going to zero, that's when it becomes money. For all you Bitcoin maxis, good luck.
You can't handle enough transactions to be taken directly and no longer be paired in the fiat dollar that's going to zero. Where do you think you get your price from? The fiat dollar. It's priced in fiat. Hart's Law. Until you sever the connection and become a self-sustaining asset that can be traded for goods. Hart's Law. Are you getting it?
All right. Hopefully we've drilled that into your head so we can actually take a look at Bitcoin. Oh, this is the most unhealthy sideways action ever. Did I say it might go unhealthy sideways? Well, I wonder. You might want to check one of my earlier videos. Probably not. You don't care. So anyway, yeah, it's going sideways. Why is this? Why isn't it showing normal up or down growth? Huh, it's because people are selling down. They want the heck out. It should have fallen lower. But Michael Saylor and other people, they're like, oh, dude, it'll never drop below 30K. They leveraged. They bought more. Oh, if their leverage pops, it crashes down even harder. Do you know where the next support line for Bitcoin actually is? It's around 20K. Yeah, we should have corrected down to 20K, but because they're covering short positions, artificially being forced to hold up the price of Bitcoin, they're going to run out of money doing that. They're going to run out of the ability to buy up more, and it's still going to crash and leave them 100% wrecked. Kind of cute. That's why I say don't leverage and don't swing trade. Don't be a Michael Saylor. So what does this mean for the price of Bitcoin? It means I don't have any optimism. Even in a market rally, which we might get, I would be really surprised if we got over 32.5. Really surprised. Like, this is basically, forget this red here, but you have to look to these. These levels over here, basically, it's not impossible. Oh, wow. Control P? No, how do I pause this? Pause recording? Just alright. Sorry for that interruption. Cut! Take! We'll see if I get around to finding that in my list afterwards if I want to do an edit. Sorry, people, I did not expect a phone call. Where was I? Oh, yes, Bitcoin. So, market rally. It's funny, like, it's been bouncing pretty steadily here between 28.5 and 31. We're going to forget that little hump. It has had a very short range movement. It's a commodity. Do I really know what it's going to do? No, but funny enough, for the first time in months, we're showing green impressions on the Instagram and overbought conditions. However, we're not climbing. These conditions show that we should be growing at this point and taking off. This is priming for the market. Will it work? Will we get that rise? We're not going back to all-time highs. I'm just wondering if we can even get to 36K here or 37. And I'm not so sure about it. We saw this increase in volume and then it start dropping off. People do not have the optimism in Bitcoin. Sorry, Maxis. And what does that mean? Well, that means ETH is not looking so good either. And with the crap news that they're not actually doing anything to improve it, it's starting to actually look almost a little bit worse. That's kind of funny, but not really. Not funny hee, not funny ha. I know, it sucks, folks. And again, showing the green impressions, still, it's not necessarily an indicator to short either. I don't play around with this stuff. I don't get into here. I'm just reading the tea leaves for you. So BNB, however, we've seen, has decided to say, you know what, we can break market correlation. We're going to go up. Like, heat is following the pain. Bitcoin's moving sideways, and BNB has said, you know what? Yeah, we've got a little more utility because we're cheaper for gas. People can still play here. And unfortunately, like the death of Luna, everybody playing around in that has probably boosted the price of BNB a little extra because you can really, for cheap, go play in the corpse of Luna trying to make money. So this is the markets at a whole. Basically, this is not a good time to make any solid moves. We've got to wait and see what the markets say throughout the week before there might be any more opportunities. If I see a clear sign of an opportunity that I would like to take advantage of, I will share it. But in the meantime, this is the market charts as they sit for now. It's not a whole lot of action. There's a lot of uncertainty at the moment that we're going to have to sort through. Okay? So this was stock indexes, forexes, quick look at price and sentiment, simple talk, a little bit of correlation, and our digital gold that we talk about. Luna's dead, so I'm not even going to hit that one. Goodbye. So now, that's right, we're into the opportunities and then almost the price predictions, what you've been waiting for. So the opportunities, why do I call these the opportunities? And actually, so Power City, did you know their sacrifice is still live? And it will be until Pulse Chain launches. The bonuses are gone for the time-related bonus. The bonuses, if you sacked for other things, still intact. The community milestones, if you're in there when they get hit, you may also get extra bonuses out of that. They're being pretty awesome. FreePulse.io, the faucet/casino. They're as well. Yeah, their sacrifice is technically not even open, but they have a pre-entry pool. So their sacrifice is open. They're just pretending it's not. The actual phase before you get token distribution will happen after the launch of Pulse. The faucet will be available, but the tokens related to the faucet will be delayed. NFT on Pulse. Well, that one is, you know what? You don't even have to sacrifice. Did you sacrifice for PulseX? Did you sacrifice for Pulse? You're getting a free airdrop of NFT on Pulse. And it's going to pay dividends in the form of Pulse. That's pretty cool. You want some more of it? Then you can sacrifice if the airdrop's not enough for you. And then internet money. Richard Hart's not copying this one over, but as discussed, it's going to be a currency because the KG team, KG and Dawn, awesome guys, have decided they want it to be a valuable used money, so they're going to pair it with everything in Pulse themselves. They're going to copy it over from the Binance Smart Chain and airdrop it free. So if you hold some IM on the Binance Smart Chain, you will get IM on the Pulse Chain. And yes, it'll be paired with every asset, which means it may be one of the most liquid assets on Pulse. Maybe? What? What? Other than Pulse, the secondary most liquid thing? No way. You gotta be messing with me. Go check out testnet. See what it's paired with. Everything. That makes it pretty liquid. Cool, right? I thought so. So now, price predictions. You're gonna be rich, boy. Haunted. Love you, man. So, price predictions. Let's get rid of this. Oh, wait. We're gonna need this. We're going to have a look at my mass. That's what you guys like, my mass. And I've kept you waiting all video to hit the mass. On sheets. All right. Pulse, buyback with staking. Liquidity providing. Valuations. So we're going to start opening these up. We are. All right. All the maths. This is right about now when I want Haunted's GIF. You got the maths? Show me the maths. Show me the maths work. Alright. Well, this was the liquidity providing calculator. Yeah, I know you guys are waiting, going, really? You couldn't have been more prepared. No, you know what? This is how I want to do it. Alright, this is good. Now, valuations and then price predictions. These are important metrics because these all work together. You can't just have one math without the other. I don't just whip this stuff out of my butt. Okay, well, I kind of do, but this stuff is connected. Like, you don't get, well, what's the price of Pulse going to be? Well, I have to know what's going to happen on Pulse to figure out what the price of Pulse is going to be. I'm going to have to know what's happening in other assets. All of these different maths have to be worked. All right. Okay. So, warning, not a financial advisor. All right. Metcalfe's law. First off, this is a simple formula. The number of users squared divided by 2 is relatively the value of a network. To say it better, the number of users times the number of users minus 1. So if there are 10 users, 10 times 9, which is 90, divided by half makes it 45. So 10 users, that would be 100 if you were just finding the square. With this formula, it's 45, a little less than half of the square. It's a lot easier to say. What does this mean? Well, it's true with any interconnected network. It's how we start to see some of the value. And I have a strange postulation that in assets that don't require fees, so an asset like a commodity like gold or like Bitcoin, where Metcalfe's law would say that the amount of value available in the liquidity for withdrawal could be related to the number of users. And that looks like a 10-cent per value point kind of correlation that I'm seeing at the moment. But there's an interesting, more accurate one in Bitcoin if you want to see that. Traditionally, this is in telecommunications networks because people need to use the network. How much can you charge to use the network, creating the value? Not how much money do people leave in the liquidity. So it's a little bit different of a concept. How do you adjust that value rating? I've been looking at that stuff to try and figure out price predictions for you folks. And the price predictions look good, but they're very rough. I don't even want to say the numbers. It's just price goes up. This is a liquidity providing calculator. So if you are a dev or a founder of a program and you want to bring your stuff to Pulse, but you have no idea what ratio you should set it when you're pairing it with Pulse, this will tell you. Yeah, you put in the price of Ethereum. Like if you had been on the Ethereum chain, like, okay, I have an asset and it's paired with $200,000 of value. Well, that's equal to 100 coins of Ethereum if it were on the Ethereum network and going to be get copied over as an ERC20 for Pulse Chain. So if you have an ERC 1155 or the other, then you can still use this to figure out the Ethereum value, the price of your asset, and then it'll basically tell you if you want to match the liquidity you have, you put in how many tokens did you have available, locked indexes for your project, type it in there, tells you how much Pulse you have to pair it with to still have relatively the same value as though as though the AMM had included you in the ERC20 buy-up. Okay, the end users don't want to know this too much. But we've talked about my crystal ball math, liquidity providing. Is it a good idea? There are things called impermanent loss, and I'm liking to call impermanent gains if you play the market right. Because of this, it is very careful about whether or not you want to apply this knowledge and try and provide liquidity. There are bad times to do it and good times to do it, in my opinion. This is just a stable coin to liquidity, and we don't trust stable coins much recently. So what would be really handy? Asset to asset. And wouldn't it be nice if the calculator just told you in big green letters or big red letters if it was a good or bad idea to provide liquidity? Yeah, that would be cool if I actually went to all the trouble of programming. Oh, look, I went to all the trouble of programming for you folks. All right? You better love this stuff. It will be available on howtopulse.com, as I keep saying, and I'm going to stop saying it because you guys aren't paying attention. I'm sorry I don't make this easier, but there is a lot of information to pour through, and I can't just do it in 5 minutes. So, these calculators, I have done in-depth episodes on how they run, how they work. I'm not going to go in-depth on them again. You want that, go back and rewatch my other stuff. But this will allow you to figure out if it's a good idea to pair assets with assets. It does not have to be Pulse and PulseX. All right, this was just an example of asset to asset that was easy to do. So yeah, I made a calculator to figure out if it's a good idea, and I even started to figure out that there are good times and bad times to provide liquidity in assets. I talk about this in my other videos. So then I started to sink my teeth into valuations, and yes, the video is called Valuations. So in crypto, I believe, or in stocks, but that word is key in there. You can search it. So I looked at Apple and Tesla. You look at their market cap, the number of shares. I know the market cap, I always harp on that number for not being real, but it does have some value for investors to sink their teeth into when you actually are applying them right and know how to read them. So then you have the available liquidity. So technically, if every single thing were to cash out, what kind of money would be available? If Apple stock, if everybody wanted to sell, how much liquidity? 6.78. That means there's no way the price can fall below that unless people pull the liquidity from the network and stop providing it. Sorry, it's not a network, from the stock exchange. So how much revenue do they make a year? I kind of started to look at that. So how many years would it take to buy all their stock back off? If it's less than 1, they might be undervalued. If it's over 1, they might be overvalued by 14 times. Oh, wait, that price needs to drop lower. But still, 10 times. Yeah, I'm not joking. The Tesla stock shouldn't be more than $60 a share, folks. And until it gets there, it's still not accurately priced, which means it's coming down. This is the points I'm making. So PulseX, Minter, and Free Pulse. Oh, there was companies that run called Uniswap, OpenSea, and another online casino where I could take a look, and I'm sorry about it. Yeah, where I could take a look, and yeah, here we go. I believe I shortcutted that revenue, but anyway, where I take a look at the companies they're based off of, they have revenues and they have a number of cryptos, and they're buying them off and burning them, which means not only, this is if they bought up their stock, they do buybacks and then they sell it back on the market. They don't ever buy it all off in a year. This is just if they could, they would. That makes investors happy for some reason, but they don't do it. But buy and burns, they're going to buy it and they're not going to sell it on your head. So that actually matters. How many years? Minter really impressed me for the fact that, wow, in my lifetime, if everyone kept selling it, it would all be available on the market to buy up. Like, they would clear it off. They could think, wow, that is the fastest buying power I've noticed out of these assets. Might be pretty well balanced for crypto. And this isn't your standard valuation. Like, this is looking at a buy and burn. This is your standard valuation. So, yeah. The future is looking bright. I will dive into some deeper math. Now, this I can set. Notice the Pulse C, that's Pulse Chain. Pulse X I can set. There's also MTR I can set. What? There's also FP I can set. What? Yes, I've done some price predictions for different models. Now I have to change some of this scale math or other things in order to make this accurate. So right now it is not set for accuracy. Apparently I broke it. Let's try this again. Okay. PLS X. But why do I have this set so low? Aha, that's why I was upset. Okay. I was messing with the liquidity too much. The crystal ball here. We want to talk about some actual things. So, Pulse doesn't have a buyback and burn. The thing is, I'm basically advancing this to look at more assets. But it's not easy. I have a day job, folks. I don't even earn enough money on that. So I'm trying to figure out how to come up with rent this month. And I don't have a lot of time for these videos. I'm sorry. I'm doing my best. So I'm rushing through this. But the liquidity, the LP size, when it's 1, what does that mean? That's the size of liquidity that's available in X. The liquidity for PulseX there's so much of it out there. There's going to be a lot more than I anticipated. So what actually ended up being the exciting thing for me? Mintra. Mintra has actually looked like the best balanced asset because it doesn't have such an overinflated market cap available to rain on your head. And it's got some pretty good strength in its buyback metrics. So Mintra has a dividend paying thing that you won't even want to sell. So it doesn't matter. Oh, yeah, it looks like it at 100% of OpenSea, which I have no doubt it'll do or better, could see 1,000x in its first year. That means it could see a 26,000x. Wait, what? A 26,000x. Did he say 26,000x? He said 26,000x in 5 years. By the buyback and burn if no one sold and no one bought. So we know the market will make movements around it, and if it's a valuable asset, usually there'll be more buyers than sellers. So these buybacks, there's potential for the price to actually be higher than these folks. Like, yes, as it goes up, it'll tickle people's fancies to sell out and claim their money. But when they sell and do those little drops, other investors will come in and scoop up before the system can buy and burn, which will slow down the buy and burn. But the point is, there's a lot of good reason for anything with a buy and burn to go up very quickly. All this shows, this math, it's not real price predictions. It's kind of like you can actually almost, there's different reasons. So, I mean, some people like to think there's so much market cap, so much Pulse and PulseX to dump, that too many people will be taking profits at a cent, 10 cents, and $1. It'll slow it down. I think this may be correct. But once that's done and they're all sold out and burnt, then it'll free up the room to move after that. And some of these assets are built a little better so that the movement may happen a little bit sooner. So yes, I like looking at all of these, and this kind of model was meant to show that all of these assets that do a buy and burn, well, their theme song should be the Chumbawamba song. I get knocked down, but I get up again, 'cause you're never gonna keep me down. As long as they're making revenue and running as a business, they will be able to buy their stock off of the crypto market and burn it, upping the price to never be sold on your head. So it doesn't matter how many people dump. That just gets screwed up and burnt. Suckers, you're out. Now you can't dump again. Goodbye. Awesome game theory. So price predictions. Alright, so Mintra looking pretty sweet, but you guys want to see the PulseX. We need the hopium here. Let's get into the hopium. Now, testnet surprised me by being 73 times larger than Hex. Why? Because it's play money. So people got a bunch of PulseX, they didn't mind providing liquidity with it. When they realize their liquidity gets bought up and destroyed so quickly, they'll start pulling it out. They also might not be so frivolous with their real money. So what do I think it'll be? Between 50 to 25 times the size of Hex. I think that 75 or 73 was way overinflated. Now, what other interesting facts have we seen? The volume on testnet has actually been larger than the volume on Ethereum, which means we can actually crank this to at least 150%, possibly 200% of the volume trading. Okay, and then we noticed a small amount of sell-off in that first wave. As we hit different price points, this amount traded for Pulse will increase as the market gets pulled off. But what we're seeing here with these numbers in testnet is yes, we are seeing a 625x within the first 365 days of operation of PulseX. I'll even scroll down and show you. That's what the price chart could look like if no one else bought or sold. Really. That's kind of cool. And here again, long term, is that $1.50 in the 5-year? Is that $1 in the 4-year? Is that 50 cents in the 3-year? Am I seeing that kind of stuff? Is this a 10,000x in the first 5 years. And yes, will investors sell at different price points to get out of there? Yeah. Will other new investors buy up before the system can do the buy and burn? Which means the buy and burn will be swimming alongside of it? Sure. But basically, in all of this, you know what, forget it. Investors, nobody buy this stuff. Only sellers and only the system buying. I can do that math too and show you, if no one else bought, how you would still make money in what kind of time frame. Yeah, this model works like that. And I've explained intricately how this math works if you wanted to build it for yourself. So I will try and run some models based on this, but let's get into the hopium range. What if it's all the way down to only 25 times? So don't provide liquidity for PulseX if you want the price to go up. 25, okay, and 150. Ooh, did we 2000x in our first year? We might have. And oh, is that a 50,000x in the 5-year forecast? Holy crap, no way. If people provide that little liquidity. Now, because the fees are so cheap and people might actually want to trade even more, what if we get up to 200%? Holy crap, what if we got up to 250%? Ooh, wait. Oops. That's alright. That should just be FP. There we go. 250% of the volume and use of Ethereum because our gas fees are so cheap. Yeah, that's 100,000x in 5 years. It's actually 143,000x in 5 years. If you can't see that green box and you're not getting the sweat in your palms and the little tickle and wheezing, please have your ambulance on speed dial. All right. Oh, yeah, I forgot. I might have added 10 and 20-year forecasts before you have your heart attack there. Let's set this back to reasonable levels. Testnet, which I think is unreasonable actually, and on just 100%. Because 100% is starting to feel very reasonable. Let's set back to that and let's have a look. What was this? The 10-year and 20-year forecast. What did I show in here? The pertinent thing. The number of X's, the actual price point, how much your $1,000 is worth, how much has been burned, and how much is left on the market in these scenarios. Yeah. So, looks like 10 years, even into the really bad settings, well, would you look at that? 10 years to our 10,000x and a 43,000x in 20. And that is if we get the same Yahoo liquidity that we got on testnet and only did the business that was on Ethereum. Now, I believe the liquidity will be a little low. Get your nitrous, get your oxygen tank, breathe. We're entering the numbers again, and we're changing over to 150%. It's going to look a little prettier. What does the 10-year and the 20-year say now? Well, holy gee. We are looking at, this is still if a lot's on the market to not rain down. That's what we mean, like, this could be sold onto the market, but it could be bought right back off by investors. No buying or selling other than the system. So anyways, amount it will... be good if I stop cutting off my tables, right? Amount it'll be worth. Effective amount invested. Yeah, sorry, there was more writing in there. Oh well. So anyway, who needs words? We only care about the numbers here. But is that $1,000 investment in 20 years worth 200 million, a 20,000x, 5,000 or sorry, a 50,000x? Is that a 200,000x? Let's actually see the number value here. There's the comma. Yeah, that's a 200,000x. I didn't think I'd need commas in the x's. But wait, folks, there's more. All right, breathe. Have your doctor on speed dial. Have 911 on speed dial even. We're going to set this down to what I think it should be, which is only 25 times the size of Hex. There shouldn't be that much PulseX out there in liquidity, folks. It doesn't need to be. And yeah, I do think we are actually going to be twice as busy as Ethereum at this point. With these settings, what do we get in 10 to 20 years? Well, holy gee williker. In 10 years. Oops, I don't want 20. No. 10 years, that is a 366x. In 20 years, that is 1 million. 1.4 million X. That's right. That is $1.4 billion in 20 years. Now, could you cash all that out and actually realize it without slippage? Not unless you used a fancy protocol like liquid loans if they added this to their asset list. But that's the power of the buy and burn, folks. And yes, all those things I mentioned in the beginning of my video either have dividends or buy and burns or both. It's gonna be a bright, 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 sunshiny day. So anyways, I hope you've enjoyed the hopium for the PulseX forecast at the end of this video. And yeah, I'm not kidding when I say that 1,000,000x is not just possible with this. It's gonna happen. The question is, will it happen in our lifetime? Will people rain so heavily that we can't get out of it? Now, you know what? I'm gonna show you one more thing. Since we've gotten up here, people are like, but Top Gun, they're gonna dump their tokens on the market as it hits price points. Like, look, in month 2, you're already at a cent. So many people are gonna want to cash out. You know what? You're right. Let's assume 100 million tokens get sold. Yeah, that's right. I just put that in there. Did that dent the price? Was I paying attention? I should have. Sorry, let's set this back to 0. Oh, you can see that little number change. I pointed at it, but you can't see my finger. Well, you might. Okay, so let's make it, instead of 100,000, 1 billion. Or wait, there's trillions in there. Let's make it 10 billion, folks. What if people dumped 10 billion tokens onto the market because it hit 1 cent? Well, it got to 2 cents the next month. Really? Well, what if they decided to... Wow, and then 3 cents. Oh, this is getting crazy. So, what if they kept dumping? Let's dump 100 billion tokens on the market because everyone starts to panic. That's 100 million. 100 billion. Ooh, we took a hit. We went back under a cent. Month 4, we're back to a cent. You have to be kidding. Then 2 cents? People really want to see what happens now. What about when we get to 10 cents? Where's 10 cents? Well, that's 9. So let's look. Month 9 at 10 cents. Alright, people are pretty ecstatic at this point. What if they dumped 1 trillion tokens on the system? Oh, that dropped us back down to a cent in month 10. But wait, what's that circulating supply doing? You see how those numbers are dropping down as I'm trying to keep the price down? Yeah, we're going to keep playing this game because I'm going to make my point finally. It's about time. So let's say that people are just going to be a little more cheeky about this. And again, we're at a cent, and everyone's like, you know what, this is 100x, and you still think this is the best it's going to be doing because it's been jerked around so much. So another 1 trillion tokens hits the market available for buy and burn. Bam. Month 11, we're still at a penny. The market's confused now, and it waits, and we get into the years. You know, we're at 50 cents. Hey, look, Hex started crashing at this price. What if 2 trillion were sold at this point? Bam. Wait, is this still set up right, or did this part of my math? Ooh, I might have to adjust this part. That should have kept functioning. But as we can see, I've taken over 10% of all of the PulseX and dumped it in the first year on the market. Yeah. Over 10% of all the holders in the first year just dumped and then got bought up and burned. So they can never dump on your head again. That's how fast that went in the first year. And we still were at 50 cents by the end of year 2 with that kind of antagonizing at $1.84 at the end of year 3. And then we could keep dumping to keep holding the price down. Like I said, I get knocked down, but I get up again because you're never going to keep me down. And I could burn this number down into the billions or millions. All that's left for the market, and show you how quickly that could be done and where the price could still be. Yeah, 10 years. Even if 10% of all of it dumped in that first year, or within the first 10 years, yeah, look at that. That's a pretty big number, folks. $312 million out of $1,000 investment, a 300. We're still looking at a million X in 20 years. I'll have to do a lot of work to slow that down with these kind of numbers. Versus the over-optimistic, it could be closer to 50. Go back and take a look at what that does to the math. And yes, that drops us down to just a 78,000x in the first 10 years and gives us our 338,000x, or in other words, 250,000x plus in 20 years. Is that enough hopium for you folks? Did you get a good dose of why we're waiting for Pulse and why I really don't care? Go ahead, let's talk the hex price for a moment. Bring the pain. I'm marked maximum pain. Could these lines be places I place limit orders? Could this downward trend be the last final ditch shove against hex before a market rally and the oncoming Pulse launch pump her up? I wonder. Are these lines good places to set limit orders? May I have tweeted out where I set other limit orders? Ranges of limit orders that you buy if it falls to this price. Those are so handy. How do you do that, Top Gun? You ever hear of 1inch? You don't need the wallet. You can use it without the wallet. And 1inch allows you to place limit orders pretty effective if you're into that kind of thing. And now, so IM, isn't that a cute little asset that you can use, scoop up, and it's going to be one of the most liquid things on Pulse, paired with everything, including Pulse. What might be handy to swap into Pulse? And one last thing, if you made it all the way to the end here, that I'm going to talk about, you know what, I'll leave this out. It's more math that relates back to Metcalfe's law. When I was looking at the value increase for a network, or actually even the buyback and burn of Pulse, when I figured out the value that's in Ethereum, I hadn't taken a few things into consideration. So there's $4.5 billion roughly locked in Ethereum. So, or there was at $2,600 per token. Now, at that value lock, in order to just 4x the price, you have to double what's available in liquidity. Essentially, the economic force would be about $4.5 billion to 4x the price if you wanted to see 10 grand ETH. Wow, that's pretty impressive. No, that takes a lot of effort. Pulse was looking scary like this. I didn't realize the way things are going to work. Pulse technically at launch should be as valuable as ETH, but people are going to trade, and they're going to trade in a certain direction. And funny enough, it's going to help because it's going to lower the price of all the other assets in Pulse. And then when the Pulse gets posted, the value in the Pulse network will be much smaller than $4.5 billion, which means it'll be much easier to move the price than I had initially thought. Now, someone made a great analogy of, think of the turning radius of a jet ski and think of the turning radius of an oil tanker. Like, Some of these things move easily, some of these things don't. When you make the liquidity for something too large, it's too stable of a price, you can't even move it up. So if you bought this stuff, maybe, testnet was fun, but don't provide so much liquidity. I'm begging you. It's not actually going to be good for price in the beginning. All right? Just saying so. Just saying so. So anyways, I hope you guys have enjoyed this math and this huge long rant. I hope you got a good dose of hopium out of this. Pumping out some price predictions. I'm going to talk more about free pulse coming up this week. And I'm going to get a little more into a deep dive as two programmers and a Gerardo are coming to my show in the next couple of weeks. Keep an eye on those live streams. That's where I do what I do my guest segments on, so they're always live. Or if something really, really important, like me saving you from the burning building that is Luna happens, that was a live video. Anyways, if you made it all the way to the end, thank you. You get a gold star, and I'll now tell you my socials. Find me on Twitter. Like and subscribe as well. Find me on Twitter, TopGunHexadian, at Twitter. Find me on Telegram, TopGunHexadian. Find me on Discord, TopGunHexadian. Find me on TikTok, TopGunHexadian. Go figure, I've cornered that name on all sorts of markets. Yeah, I'm getting easier and easier to find, folks. I'm trying for you. So anyways, thanks for tuning in, and until next time, keep the hope and stay frosty.